All right, guys, what's going on? Hope y'all had a great week. Um, we're back at it again. Going to continue with these workshops here for you. Um, this should be a little bit longer than most because we're going to recap all the trades from this week that I took. Sorry I couldn't do them on a daily basis. Just been, traveling and all that good stuff. Haven't really had time to. So now we're going to condense pretty much a whole week's worth of trades into pretty much one video recap. So just kind of pay attention to this. And really, it's only like five or six. It's actually only five trades. Like one trade a day I did. Ended the week with a couple $1,000s, which is great. Obviously, last trade was a loss for like $85, but no biggie. All the other ones are green. So great week, even though it was a tough week to trade in. A lot of you guys made bank, which is good. So we want to kind of just continue that motion. In this workshop here, what we're going to pretty much cover is probably the nitty gritty of what a lot of you guys were asking for, which is, I know, trading strategies. All right. So we're just going to talk about some trading strategies in general. For this workshop here, I'm going to cover just position trading and swing trading. So we're going to talk about that in this workshop. It's not going to be like super detailed, but just enough for you to kind of get the grasp of the concept for you to practice it on your own and see if it's a trading strategy that fits you as a trader, okay? But at least that way you kind of know about it. So obviously you guys know I'm just a day trader. I'm not really a swing trader. But there's people in the group that swing trade. Every now and then I may swing trade if I see that the opportunity presents itself. But for the most part, I don't really swing trade too much. I feel like my attention span just isn't well enough, and I'm impatient. But that's just me as a trader. Some people, you know, are really good at it, especially because they got other things going on in their life. Swing trading works out well for them, which is why we implemented it in part of the alert system so that people can have swing trades. They don't have to keep following up with the trade every day, every day. They can just set their buy-in price and set their, target price and get out and go on to the next one. And of course, position trading, we'll discuss that in more detail, but it's basically, holding a position for a long term and then exiting when you have your target price. But yeah, we'll get into all that here in this video in this workshop here. But until then, stay tuned for the rest of the workshops, guys, because these strategies are going to be very important. A lot of times you guys are asking me, why you're doing bad on the trade or what type of strategy you should use. We're going to cover some general ones that might fit for you. So definitely pay attention to those. Also, while we're touching on topics of other, reviewing other trades. And then, of course, for the rest of you guys that are in the course or whatever, we're going to be getting into some really super detailed stuff. It's going to be a lot of information coming up for you guys in those courses over the next few weeks. So, yeah, we got a lot planned ahead. But, yeah, let's get back at it, guys. Pay attention to the video. Let me know in the comments if you have any questions, or even if you guys want to keep doing these videos, for the few hundreds of you that are paying attention. And I know a lot of you guys are making good bank on it and learning stuff. That is great. That's the important thing. I just want you guys learning, because again, day trading is for everybody. But the more that you know, the more you can practice, the more you can do it. And like I said in the in the video, you'll have days where you can just get up for an hour or two, make a couple $1,000s, and go about your day. So, just trying to do this for you guys. Let me know if this helps you out. You know, at any time. So you can message me, email me, whatever you want. But yeah, let's go ahead without further ado, get into everything and start learning. You guys have a great weekend.
All right, guys, we are back at it again. Let's go ahead and get started on reviewing these trades here. Now, today, of course, we're going to be doing the review cap for the trades of this week. Since I've been traveling, I ain't really had time to kind of go over these trades, but we're going to knock them all out here for the week all at once, which is going to be pretty simple because I didn't really have too many trades um, throughout the traveling period. Pretty much, I think 4 or 5 trades altogether for this week. Not too many, but you guys know me. I'm simple. I like to keep it simple. One trade, get in and out, make my money, call it a day. All right. So let's start attacking this bad boy and see what we're looking at. Okay. So let's start with the first trade of the week here was ZIVO. So let me pull that one up and we'll take a look at this bad boy. This one has actually been a pretty good play over the course of the week, I would say. Ups or downs, whether bullish or bearish, I think it's been a pretty decent play for the week. So my first trade on this one was on the 20th, which was pretty much during this time frame here. So let's kind of zoom in on this and take a look. All right. So with this one, I pretty much got in at like, I think it was like $6.13 and got out at 8.20. Pretty much all before pre-market. I almost nailed the top on this one too, which was pretty cool. Um, all these trades, guys, you can go back and look in the Facebook group. I don't really have time to be pulling all these up. I just want to kind of review these with you so you can kind of get a glance at everything, um, and kind of pay attention to it, to kind of see what it's looking like. Because I know a lot of you guys say this helps you out, which is good. That's what it's for. So that's what we're going to get into. Let me see if I can actually pull this back up here. It's the 21st. I'm gonna try to pull alert up here so you guys can kind of see it, because I think ZIVO was like one of the first alerts of the day that day, and it wasn't on the watch list that night. I think HLBZ was. Let me double check here. September 20th. Yeah. Let me pull up the alert for that day. Oh yeah. Okay, there we go. All right, so let's take a look at this. Oops, sorry, made the chart disappear. All right, so pretty much this was the watch list put out for the 19th. It's kind of looking into CRVS and HLBZ. So that was pretty much supposed to be on the eye for the day, but then doo ZIVO comes up. Now, as far as like the other alerts, of course, guys, you want to take a look at those, see if they meet your trading criteria, because again, typically these are stocks that are moving, um, that you really want to be looking at and seeing if it fits your criteria to trade. For me, that volume increase had me want to look at it. It was no news. This thing was alerted at 347, $3.47, which is probably like right here, the first alert for it. So obviously, if you pull that up, you probably don't see a setup or anything like that there. But then what happened? And this was during pre-market. Keep that in mind. Um, it just no news, but then it just kept lighting up. $4, four. It just kept lighting up, lighting up, lighting up. So obviously at this time I'm looking at it, and I jumped in pretty much like right after the 6:30 area, because I got in. I'm sorry, right before the 6:30 $6.30 area, because I got in at like 6:13, which wasn't until like right here. Now I know you guys are probably saying, okay, well, why'd you get in right there at that point? Um, you know, Point being, to kind of cut to the chase, guys, level two price action on this looked really good. A lot of buy orders are coming in, so I jumped in, and what did I do? I did my ride the wave strategy. Um, because of the point, because of where I'm at on this entry and exit based on my strategy, I kind of had no choice to do the ride the wave strategy. I couldn't do my other strategies because there's no setup for the other ones. It was just that one. And if I'm entering that trade, I know I got to get in, try to attack and get my, you know, 3% or more, and then get out, based on my risk to reward ratio. Luckily for me, the buy orders kept coming in and kept coming in, and this thing just kept extending and extending and extending. And I got a like 820, which was like right before the end of the tip here. So that was a really good move. That was like 36% gain, for me, from like 613 to 820. I mean, can't nail it no better than that. And then it began to, let the sell orders started to come in, and it was time for this thing to make a little change. Um, which these sell orders hit pretty deep. You know, I mean, if you think about it, I got in at 613. If I would have held, I would have, took a massive loss. But again, that's not part of my strategy. It's based on where I entered at. Holding that long was not part of my strategy. My strategy was to get in and get out. The moment I'm seeing orders that aren't, showing levels of support, I'm gonna get out, and that's pretty much what I did there, which is good because even if I were to hold this, I could have made some more gain and back again when the bell opened. I probably wouldn't, me personally, wouldn't want to take that risk. I wouldn't probably pay attention again till the EMA and the volume weighted average price cross, and then that's when I know it's crossing into bullish territory, and then I'll start to look at it again. But again, that's just me based on my trading strategy, and obviously holding this thing throughout the day. I'm not going to, but it's good I didn't, because look, it just dropped. So you don't need to be holding these things for too long, depending on your strategy and your entry and exit point. So that's just the ZIVO trade that I took for, this week. Let me see how I did the rest of the week. I think, yeah, today it was kind of alerted a little bit today, I think. Um, let me see. Let me jump down to that. Was it alerted, or did it just have good movement and no value? Oh no, it was alerted. It was alerted at like 5:23. So it was alerted like 7 o'clock in the morning. So yeah, I mean this was a good move. Um, yeah, it was probably alerted. Yeah, it was alerted in this area. It went from 5 to 7. Good $2 move. I missed it. I didn't trade that one. No wait, I jumped into ZIVO guys, and I and I took a loss. Oh yeah, let me cover this one. This is the Friday trade. This is today's trade. So I'm doing Monday and Friday right now, guys, and I'll do the middle of the weeks here in a second. So I remember what I did on this one wrong. I got in this thing at the wrong time. I got in at peak. I think I got in at like $6.77. Where let me zoom in a little bit. So I got in it like right here after it was alerted, which was dumb of me because I see that the moving average convergence divergence is lining up. I know it's going on a downtrend, and even here at this point, it's kind of showing that it's letting off steam. I didn't pay attention to the price action either, but it was holding a good level of support, so I held it. I think trying to wait for it to, make a move. But I just got in at a bad point at the very tip um, here, which was not my best entry, and obviously a little too late. So this is kind of helps you out, like not all indicators are 100%. Not every strategy is 100%. It's always room for error. But luckily for me, it was only like an $85 loss or a 2% loss. I think I had because I went ahead and cut my loss quickly. You got to take in things like, for me today is Friday. I don't trade very well on Friday because I'm just ready to kind of stop looking at the computer by the time of the this time of the week. My patience is much more shorter. Mentally, I'm not usually focused. The market's always tricky because option calls are expiring. The market is jumping all over the place. Today is a bear market. I mean, there's so many other factors to consider. Um, when trading as well too, guys. Things aren't just black and white. Because if it was, we'd all be millionaire traders. But you got to know yourself as a trader. For me, entered in the wrong time. Um, the only positive indication I had to kind of get in this trade was the fact that the EMA and the VWAP crossed, and it was a pretty good time for me to enter at that point. I think also too that's probably why I got in so late. I didn't pay attention to the relative strength index. I didn't pay attention to the moving average convergence divergence, which I should have. And I think with price action during that time, it was so sideways trading at that point, as you can see from right here. Like the buy and sell orders were thinning out, and I was assuming it was going to pop some more, which it did. I was in the green for a minute. I kind of got a little greedy, expecting it to run a little bit more, which I should have taken into account that it's Friday and of course the market's red, but I did. But anyways, I got in. I was in the green for a while. By the time it got right here, I was like, okay, yeah, this thing isn't going my way. I waited too late. I should have took my profits. Got a little greedy. Not gonna lie, happens. Um, but I was able to cut my loss relatively quickly, which I'm glad I did because even though some of it came back. Remember, my entry point is at like six. You know, let me actually do the line for you here. That way it'll be easier for you guys to kind of take a look at this. All right, so my entry point is like 677. I think it was $6.77. Yeah, so pretty much all through here. All right. So now let's analyze this, guys. If you kind of take a look at this, if this is my entry point, and I had a little gain up to like $7.50. It's probably like the peak of this, which is like a 70 cents move. Um, that's a pretty decent profit. But I cut my loss. I cut it quickly, especially when it crossed into bear territory. It just wasn't no point in me getting in or staying in. So let me take a look at this here. I'm sorry, just a second. I think an alert went off. I want to see this is something important to pull up. Nah, it's just AMHC. Um, yeah, so pretty much that's where all that happened, and I took the loss today, which sucks, but cost of doing business, right? So if I would have been stubborn and not cut my loss, look at this thing just died off the rest of the day. Thank God I did what I did because I saved myself probably a couple $100 had I tried to be stubborn and pray for it to come back when there was clearly no signs of this thing coming back. If you see these candlesticks, indication it's turning into bearish territory. I haven't seen any other indication of it coming out of bearish territory. It's getting stopped. It's getting stopped. It's getting stopped. It's getting stopped. It's this is just pre-market, and then come opening bell, this thing just drops. It's fighting, but the bears are winning. There's no point in me staying in this trade. So this was DIVO. Basically, my point here in this trade today, Friday, cut your losses and cut your losses quickly. The moment you recognize that the trade is not going in your favor at the point of time that you assumed it was going to do part of your strategy, why stay in a trade? At that point, you're just holding on in hope. Because if you just go ahead and cut your loss, stop worrying about the money, go back and revisit what went wrong, you can figure out what you need to do to do it right. Okay. Now, of course, there's a few bases of things that you want to have aside from your trading strategy, but that's a point for another day. This is basically understanding that, hey, the plan you went to go in with this trade is not going as well as you thought it would based on your strategy. You're reading the chart, you see it, there's no point in staying in it. Let me do this here in real time replay so you can kind of get the gist of what I'm talking about. So, press play. You're watching the stock. It's doing its thing. All right, you decide to enter. Okay, perfect. I'm in the trade. Let the trade play out. Excuse me. Getting some water here. Let's speed this up. Dying over here, guys. I'm just kidding. It broke it. Let me replay it again. Real quick. And we're going to speed that up like a few seconds. So, anyways, you in the trade. Boom, boom, boom. You see it. It's doing its thing. All right, you're in the green. Great. And then it's holding here. I'm like, okay, that's good. I mean, that's a good level of support. And I start to get greedy. I should have cut my loss. Really, I should have just took profit because I already hit it at that point. It's like a good 50-cent move, but I didn't, and it just dropped. And then at that point, it's time to get out. You know, get out on the next screen turn, especially when you see it's not breaking and it's starting to let up there. Go ahead and get out. There's no point in staying in there. You're just holding on in hope. This is what I'm telling myself as I'm reviewing, the trade and understanding what my strategy was going into this. So, yeah, nothing wrong with admitting defeat. All right, so that's DIVO, guys. That's this thing for the day. Now let's take a look at Tuesday's trade on the brighter side of things. So ZIVO was my only red trade for the week. 4 out of 5, not too bad, right? And the first time I traded ZIVO, I had a much better percentage gain. 36% gain, 2% loss. Not a bad risk to reward ratio. All right. Let's take a look at HLBZ. That was a good one. Now, again, the reason why I couldn't do the videos, guys, I was, traveling, of course. I was in Michigan taking care of some business. But I had time to do the trade. This took about a good, it didn't take long to do. But let's take a look at this. This was on Tuesday the 21st. I think this was the area where I traded it. So let's take a look at this thing. Let me jump back up to that. And I'm going to let you follow along with the alert. 22nd. Pull it up. Now, HLBZ was not on the watch list. It was just alerted. You had other things going on. Now, Eric, out of all these alerts, why did you choose HLBZ? Because it fit my criteria, guys. Now, all the alerts will not fit your trading style. You got to understand that. All these things are doing are pointing you in the direction of the stocks that have the best potential to run. Okay? It's not no crystal ball. Nobody's alerts are magic crystal balls. I'm going to save you the headache from spending hundreds and potentially thousands of dollars for alerts that you think are going to tell you before a stock is going to run. That's not the case. That's not how it works. Okay? For anybody's alerts. Trust me, I know I've tried them when I was in your shoes in the beginning. It doesn't work that way. Um, but pretty much, you got to identify your trading strategy and what fits you. These alerts are pretty much just universal for anyone who's needing to day trade. And of course, you have the swing traders who do the swing trade watch list. But let's go into HLBZ. Was it on the 21st? Oh, I'm on the 22nd. Look, I'm tripping. Tuesday. Here we go. Sorry, guys. It's been a long day, long Friday. Um, let's see. So, yeah, HLBZ. Boom. They announced the partnership with Amazon. I think we kind of covered this. This was like the latest news. I don't think this was the date that the news came out, but this was the latest news that they had. And we talked about how smaller cap companies, when they mentioned, bigger blue chip stock companies, how they can potentially run. Obviously, this news was circulated again, so it's going to, bring more traders to the table, right? So it's alerted at, 5:30, um, which was pretty much, yeah, it was it was alerted right there, um, right at the beginning, letting you know that hey, this thing jumped to 25. So I know, contrary to what I just said about the stocks telling you before they blow up, the stocks will tell you where to go, um, and look for the blow up. You do want to get in before it blow up, but the point is to get the meter to move, and that's what the alerts do, guys. Allow you to get the meter to move. Don't try to nail the top. Don't try to nail the bottom. You get in, get your money, get out. It's the name of the game. All right. So, anyways, it was alerted. Now, mind you, I didn't get into this thing until like it was at like $32. So it was alerted during pre-market, and then it just kept running and running and running and running and running. I finally got in right here. Now, I know you're seeing like, hey, this thing is really, really overextended, right? And it's at the top of the moving average convergence divergence, and it's on a red candle. Why would you get in it? Or it was on a green candle, but then it, transitioned quickly to a red candle. Believe it or not, with HLBZ, I only got like a 13% gain. Um, and my idea was here, if this news was not going to play out the way I think it is, I'm going to just go ahead and cut the loss, typically at like 25 bucks. Luckily, it never reached there, but that was part of my risk to reward strategy on this trade. Um, I was going to do the VWAP strategy because it's a big of a larger price stock, so I don't expect it to turn too quickly. But if it did drop, I assumed it would probably drop, maybe $4 or $5, which is okay with my risk to reward ratio entering this. All right. I'm knowing all this going into this trade, even though I'm entering in at not a so ideal time. But my plan was with me entering at this point, if I needed to double down, I will. And so we got in. This thing held pretty well. One big warning sign for me was that when it tried to turn, it didn't do much. And so I kind of tested the waters there and figured it was time to kind of get out, which was only a few dollars move. Again, on this trade here, it wasn't really that big. I only made like 13%. Um, and I think it was like somewhere within the $36 range. Um, but it touched as high as 38. So it actually did better um, in opening bell for a little bit and then crashed down. So I knew this wasn't going to be too much of a big runner because, for one, it's already, high. And two, it's ran before when we, was alerted a couple of weeks ago. So it's okay for it to possibly continue. And if you held this stock, for a while, kudos to you. This was like a good $10 move. So before it jumped again. Obviously, if you're swing trading, you probably nailed it. But if not, hopefully you manage your risk properly. But that was my plan in this one, and it worked out well. I didn't want to get too greedy with HLBC because I knew it was a former runner, and I figured that with it jumping that much, a lot of bad holders would probably want to cash out, which is kind of what happened. I mean, it moved a couple of dollars, which is still good, but for me, in my trading strategy, my tolerance, it wasn't worth it for me to try to risk it to stay in, especially if the market wasn't running. I think all this week the market was just trying to rebound from you know the red days, it's taking a big dip, so I didn't want to risk that either. But that's HLBZ. Pretty simple, pretty simple. So let's go on to the next one. Wednesday, guys, I didn't take any trades because I was on the plane all day. Uh, you know, and every time I tried to, take a few moments to set up, you know, little workshop while waiting for another flight, it just wasn't enough time, and that was it. Just it just wasn't worth it. So, and I couldn't focus doing it on my phone because I was doing so many other things. But it's fine. You don't have to trade every day. I tell you guys that all the time. All right. Now let's take a look at yesterday's trades from Thursday. No, let's start with the first one. MRM. Biz baby. Oh man. Oh man. Oh man. Guys, guys, guys. MRM. Let's first start by talking about this freaking watch list. Let me pull this up here. Because I tell you guys all the time, this one was kind of the freebie for the week. So this is the 23rd. This is Thursday, right? This is the 22nd. This is the night before. I told you guys on the morning watch list, hey, MRM announced that it had entered into a transfer agreement with the existing shareholders, blah, 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 blah. So naturally, guys, when you're viewing this watch list for the daily watch list, those stocks, especially, at least if anything, the two that are at the top you should be eyeballing this for a potential trade to your strategy as a day trader. Now, obviously, of course, if you have Webull, you have the ability to trade pre-market. You guys know a lot of times I'm done with my trades before the market even opens because I'm using Webull, and I'm not trying to sit through all the craziness unless depending on how the day is. But I like to be a little lazy sometimes, and do work for a little bit of hours and go about the rest of my day doing other stuff. But anyways, let's not get into all the semantics. It made great movement after hours the day before. It was on the watch list. So you had all morning here to look at this stock. Now, obviously, the beginning of the pre-market, not much happening. It's just grinding. It's grinding. I never took this off my radar, off my, you know, 9 charts that I'm looking at throughout the day. Um, it just, it makes no sense to not look at it. All right. Especially the only time I would take something off of my pre-market watch list and not look at it anymore is if the volume on it is very low and there was no news or nothing like that about it. If, for example, let's say if a stock had great movement on the watch list from after hours, like, oh, after hours yesterday it moved pretty good, but there was no news or anything like that about it, and then I wake up in the morning and look at pre-market and the volume on it is very low and not moving, I'm not going to pay attention to that stock during pre-market. I'm going to move on to it. I might keep it in my back burner until possibly opening bell to see if it does anything. But before that, I'm not touching it. If there's nothing happening during the pre-market, I'm not touching it. But luckily, you guys easily could have had your eye on this. You could have woke up in the morning, wiped the crust out your eyes, and pulled up MRM and put it on your watch list, and just wait for a form to set up. For me, when did that form set up? Pretty much right when that alert happened. Now, I got an MRM at like $11 and 30 something cents. It was very late when I got into it. But not only was it on your watch list, you were alerted again at $9.90, which was pretty much here at this spike again because EMA crossed, volume weighted average price crossed. It was a good setup for you to get in. If you're a bull trader, this is what you want to see to begin to start looking into getting into a trade. Not only that, once it crossed and it began to come back down and hold support level, pretty good relative strength. This is right in the middle of the relative strength on the bottom level of the moving average convergence divergence. Obviously, it has to go up, right? If you have no idea what I'm talking about, guys, go in the Facebook group, click on the file section of the group, look at those books, read that stuff. If you're in the course, you have no idea what I'm talking about. Go take the course again. I explain to you all this stuff. Okay, I explain it to you all how to do it, how to set up your own strategy, how it all works. It's pretty simple. All right. Well, it gets simple once you do it enough. Anyways, so everything is there. I get it. Great, great. It looks great. Still forming. Getting alerted. Hey, MRM still running, still running, still running. And this thing, just kept going. So I decided, hey, you know what? It's time for me to get in, especially when it was at like 11:15, which was like right there. I got in at 11:14, which was like pretty much right here in this area. So got in, and I knew that was the perfect time to start riding this thing on up. Now, luckily for me, good 30% gain on this. If you take a look at this thing, after I got in, there was no reason to get out the trade. Volume weighted average price was there. The exponential moving average was just holding up, moving up, moving up, moving up, and you pretty much could have rolled this thing all the way up into the opening bell, which is pretty much what I did. So this trade was just nailed, right on the head. Um, and obviously during opening, it just dropped. Well, you could have, waited and shorted it on that side if you want. The skilled traders, what they can do is they know how to go long and short, and they can do both on the side. Obviously, you got to find shares of short if you're doing it. Unless you're, like I guess like an options trader, you do puts and whatnot. But I don't trade options. That's out of my realm. But yeah, that was pretty much MRM, guys. Now I didn't hold this one too long because I also jumped into Neuro. Let me pull that one up, which was the other trade I did on Thursday. And those are my only two trades. Um, well, why is it? Let me pull that back up here. Neuro. All right, not today. On the Thursday. Today is the 24th. We go back to it. What day was that? 22nd. Oh, sorry about that, guys. I don't know what the heck happened there, but anyways, NURO got it pulled up. So pretty much the alert went off. Pretty simple. During pre-market, volume spiked at 1376, spiked up, and then I got in this one. This one was fairly quick. I didn't really wait for much of a move here. Anyways, alert went off 1376 that it was popping up, so it popped up. I waited. It pulled back, and I waited some more because it never even really turned green much. So it pulled back some more. Once it did, and it started to hold the support right here at this level. And this is still pre-market. Remember, not a lot of price actions happening, but enough for you to be able to track it. So, anyways, I get in at 14. I think it was like 1457. I had got in, which was like right here after I seen the sell signal here, and it broke above the sell signal on its way of turning up. I figured I'd take the chance, weigh my risk. If it dropped below the VWAP, I'd get out. But another thing to consider, we were close to coming into the opening bell. You guys know me; I don't like holding into the opening bell, so I let this thing run up and run up and run up, and then boom, right there, got out like 520ish. Now, NURO was a small, little 3% gain, wasn't much, but still an extra $200 in my pocket, so I'm not going to complain. And I'm glad I, stuck to my plan because look what happened in the open. Of course, all the sellers, you know, started to sell, and this thing just started to drop. Um, the rest of the day just, ate the dirt. So if you were bearish and you got in on this, congrats to you because you probably made a lot of money. But me as a bull trader, I get in, got out, was ready to go. So that's how NURO went. But those are pretty much all the trades for this week. Um, congrats to some of you other guys. I know you guys are banking on other alerts. I think CI was a good one this week. I didn't trade it, but a lot of you guys did. And this thing just kind of, it kept consistent throughout the week. So if you were, you know, good enough to hold this thing through pretty much all the alerts this week, congrats to you. Um, good, decent movement there. I think there was a lot of other different plays on there for you guys to have the opportunity to make money. And again, all this just comes from you, learning and studying. and knowing, what to do in your strategy. Um, if you have no idea about, what strategy you want to use or how to use a strategy, try them all. See which one you like the best or most comfortable with. Just because you are more comfortable one than the other doesn't necessarily mean you'll trade one better than the other either. There's still more aspects for you to understand with that. Okay. Um, like there's other strategies out there that I can trade and see much more better than I can actually execute on, and that's just because of a psychological aspect. It just it's easy for me to read, but not so easy for me to execute, and that comes from months and months of back testing and trying it out on my own and making sure it works. You got to put in that work, guys. Got to put in that work, but when you do, guess what? These are the kind of results you get. You can wake up for an hour or two, click a few buttons, make a couple $1,000, and go back to bed. That's just how it is. So yeah, so hopefully you guys got some good insight out of these reviews. Out of this, whole section here. So if you guys have any questions, the routine. Just post it in the comments. I can answer it for you. Message me, whatever. Doesn't matter. But let's get ready for the last week here in September. You guys got a lot of more information coming up here this last few weeks. It's going to be cram packed with a lot of how to do this, how to do that. So you just can know a little bit more information, okay? So until then, guys, stay green. All right, y'all. So we're going to go ahead and get into the little uh, section of the workshop here. We're going to talk about different trading strategies, okay? Today we're going to touch on two strategies, basically. First one's going to be long-term trading or position trading. And then the second one we're going to touch on here is going to be swing trading, okay? Now, understand, within these strategies, there are various different ways to approach these strategies. Not all, strategies fit every trader, and of course, every strategy has its ups and downs. So, of course, this isn't financial advice. This is just for educational and entertainment purposes only. Um, you know, with the information you see is fit. Okay. So now again, when it comes to these strategies, not all of them are going to be the same, and another little caveat is that you want to make sure you're approaching these strategies to your strength, whether it be you being a bullish trader or a bearish trader. You want to make sure you're approaching it that way, okay? Whatever fits you best. So now let's first talk about what position trading is, or long-term trading. It's pretty simple. Basically, it's trading based on mostly fundamentals. If you're a new trader, new to the market, I highly recommend that you do position trading or long-term trading. Why? Because, like I said, every trading strategy has its pros and cons. With position trading, you basically don't have as much stress. There's less stress, and you get the potential to have higher profits because you've done a lot of analysis. With long-term or position trading, what it does require is fundamental analysis. Now, if you don't know what fundamental analysis is, go back and look at the video. I'll put in a link here for you to be able to understand how to do fundamental analysis. Okay. Now, me myself, I do position trading. Typically, with my positions, I'm usually just reevaluating them maybe once a quarter, once every 6 months, or once a year. I'm not really, on them like consistently. I would say probably the quickest you could do that type of trading is maybe once a month. But anything before that, you're probably just getting into swing trading. So with position trading or long-term trading, you don't have to be sitting there eyeing your stock day after day after day after day. So again, like I said, I do mine once a quarter, maybe once every 6 months. Um, and that's just pretty much how I execute it. Now, how do I do long-term trading, might you ask? Pretty simple. The easiest way that I would say to do it is by doing this here. Pretty much what you would do is go to FinViz. Now you would go to Screener, and then you would pretty much screen for the criteria that you want to look for within your long-term positions you want to take. You can actually click on the fundamental tab here, and these are some good basic fundamentals you can focus on when it comes to looking for those type of stocks that you want to take positions on. Whether you want to take a long position or a short position, doesn't matter. Whatever you do, you want to make sure you're fitting your criteria to meet that. For example, if I'm a bullish trader, I want to look for some bullish stock. I might want to see something with some growth, that's been positive, over 10% or over 5%, whatever you want. Return on assets positive. And again, I'm just kind of giving you examples of how to utilize this filter. Again, the way I do it is put in the fundamental analysis video in a link here, so you can check that out on your own time. Um, but that's, pretty much how you do long-term position trading and what it pretty much entails. Once you find out which stock you want, like let's say for example, if you like, oh, I want to go with, American Airlines here, you can from there at that point set your mark of, where you may want to enter and when you may want to exit. It's pretty simple. Trading doesn't get really much basic than that, and you're just reevaluating that every, few months or so. All right. So boom, bada bing, bada boom. That's long-term position trading. Not my favorite strategy, but I think it's pretty good for people who want to be, investors and things like that. Or if you're looking to grow your portfolio, pretty good thing to do. Okay. Now the next strategy we're going to get into here is swing trading. All right. Now, what is swing trading? Swing trading is basically when you are holding a stock for a couple of days, a couple of weeks, and pretty much trying to profit from there. Now, you guys know we do the swing trade alerts once a week. Typically, with me personally, I like to do my swing trades to last maybe 1 to 2 weeks until it hits my price target. So I'm going to give you guys an example of, one of the ones that we had last week, so you can kind of get a glimpse of it and understand how that pretty much works. Okay, but it's fairly simple. I'm able to do this video pretty early because it's kind of slow this Monday on the 27th, but it's all good. The market's always turning. So let me pull it up here. I believe it was Lucid. I think we'll take a look at Lucid. Let me see if I can get this pulled up here. It's actually on Sunday. So yeah, so the watch list for the swing trades are sent out every night. So let's do like last week's watch list, and we'll take a look at Lucid. You guys can see here, I put Lucid, the Tesla killer. Like I said, news was circulating about the new vehicle that was out with it, and I put, stop loss would be 18. My risk tolerance there for me, but I was looking for it to get back into the, into the $30 price range. So let's pull up Lucid and take a look at how that pretty much did last week. And that was a long position. Like I said, when you do your swing trades, you can either take, long positions or short positions. But these are ones you might look at these like once every, couple of days or so, just to kind of see where it's at, maybe where it's trending, things like that. Swing trades are good because you don't have to, eyeball them every day. Me personally, I don't like to swing trade too much. I might swing trade a few stocks here and there. I know how to do it. I just don't like doing it too much because it just doesn't fit my trading style. Again, I like to be in and out, and trade my strategies. And as we go through the rest of the workshops, guys, you'll understand what I mean by that too, because there might be some other traders who day trade that don't trade like me. And as we go through these different strategies, you'll understand which one might fit you better as a trader. I encourage you to try them all just to see which ones you like. Okay. Um, so yeah, so this was on the 13th. Let me zoom out to the 13th here of when this was sent out that week. Pull back. Let me zoom this out because that was actually a good swing. And congrats to those of you who banked on it. I know some of you guys mentioned me, said, you made some good money on that, which is good. That's what I want for you guys. Keep making money. Keep on keeping on. Let me make sure this thing is all the way. Let me zoom out. Give me a quick second here, guys. That's today. We need the week of the 13th, which was right here. Right here. Excuse me. So, you guys got that little watch list. So like I said in this, that my stop loss will be $18, right? And I was expecting it to go back into the 30s. And I think it hasn't gotten quite there yet. Let me double check here. Let's take a look at these bad boys. Now, let's say if you would enter that position at this point, you would have got out. See, it's only been like a week. I think it did slightly touch 30s here, or close to it. So imagine if you would have held this throughout the whole time frame, which would have been a good swing trade. That's about a week. What I just say? I usually shoot for a couple days, weeks, no, maybe usually no more than 2 weeks. I try not to hold a swing trade until. But if you were swinging that, this thing consistently gone up. It never even touched 18, but that's a good stop loss for, risk management purposes. And had you got in that trade like you was alerted to, you would have made a really, really decent gain on Lucid. And full disclosure, I think possibly this week I said I'm starting to see it to turn down. I'm expecting it to, start to come down. It's actually a bearish trade uh, from here on out. I think I had put, let me take a look here at the alert for it for this week. Yeah, see now some of my bearish swings. Since we already hit our target, I'm expecting it to start to downtrend a little bit, unless some news come out, but I doubt that'll happen. And I put the stop loss in there for you if you did that. But guys, that's what swing trading is. You set a target, you wait for it to hit the target that you're expecting it to hit and just cash out and move on to the next thing. You can even do trend trading within swing trades as well too, which a lot of traders do. Um, we'll talk about that a little bit more, trend trading in the next video, but understand that you can do that, with swing trades as well too. So that's pretty much, swing trading. Like I said, everything has its pros and cons. The good thing about swing trading and why, if you're new, let's say if you don't want to wait long doing um, position trading or long-term trading, swing trading I think is really, really good to start out with, especially when you're new and trying to get the hang of, things like day trading and stuff like that on a faster time frame. Because with swing trading, it's really good to do as a hobby, and plus it presents much more opportunities in the market as opposed to something like, day trading and things like that. For example, like today, the market's very slow today, right? If I'm a swing trader, I don't care because more days to look at. But me as a day trader right now, probably bored out of my mind, which is why I'm able to do this video for you guys. But as a swing trader, you're not really worried about today's like today. The market's trading sideways, not much going on. Um, you know, and your stocks is pretty much in the right direction. That's all you're really worried about. The only problem, of course, like I said, there is some cons. The problem with swing trading is that there is some overnight risk. You never know when a company might have some bad news, something might happen, some kind of world event that might affect the stock that you're trying to trade. Um, or it could be things like the company might issue new shares and the stock might drop, things like that happen. So that's one of the cons of swing trading. Another con is that it does require extensive technical analysis and being able to read indicators and patterns. So if you're new, that might be a little bit of a downfall for you because you haven't picked up all that yet. But the more you practice it, the better you get. And of course, you want to be able to identify those patterns and charts on a bigger time frame so that when it comes to day trading, you can recognize them on a shorter time frame too. Okay, so understand that. So swing trading, understand your technical analysis. Like you'll see things, within a daily, like different patterns, stuff like that. You want to be able to recognize the different levels of support and be able to technically analyze these to be able to manage your risk to reward ratio easily. Um, and then you go from there. Okay. So guys, those are um, swing trading type strategies that we talked about. Like I said, we'll go into more detail on how to perform these a little bit better in the course and stuff like that. But right now, I just want you guys to get a general gist of it in the workshop on how to do it, and how that pretty much works out for you. Okay. So there you have it. Next video, we're going to talk about some more trading strategies, maybe get into them a little bit more depending on how fast the market is, and kind of go from there. All right. Until then, guys, stay green.